By the way, I learned that you've been on the Rip Ride Rocket. I thought you went on it one time. That goes
About, yes.
at Hollywood Studios. You didn't go on. I thought you said you went on.
No, we looked at it and it broke.
Up the way.
Yeah, so I turned around. It was like a 10-minute fix.
So you could play music while you're on the roller coaster. You know the theme, right?
Yeah, I got the idea. Yeah.
There's a hidden menu on that screen. You can play anything, like the Muppets or something. Yeah, it's like hidden menu with hidden stuff. That's not really a Disney fact, but you know what I mean?
No, it is a fact. It's certainly a fact.
I need to let people know I've got my eye out all the time for those little things, you know?
Yep.
Wherever it needs to be. Hey, welcome to the Closing Beat, everybody. Happy Tuesday. How you doing out there? There you are. Hope you're having a good day. Welcome. We are financial advisors here at Jazz Wealth because the shirt says so and has always said so. And try to keep up with us. You know what I mean? We're always doing something, trying to, one up the other guys because the other companies are much bigger and, they got Super Bowl commercials and all that stuff. Well, we've got to step it up. So we've got our Thursday Wine and Wealth classes. We got a research site. We got our own custom client portal. We are now going to be soon, not now. We're going to be able to manage any account that you have anywhere. So if you're like Dustin, you do great with the Roth IRA, I'm happy there. Help me with my 401k, my TSP, 403b, HSA, 529, you name it, we'll be able to add all of it in there. So, we just do what we do, just moving along, trying to do things. And then 2022, I have one thing that I've been dying to bring to the average person that generally only the super, super wealthy people get. And it's happening. It's not a thought. It's no longer a dream. It's not something I'm fighting for. It's something that we've gotten big enough now where we can say, hey, why don't you just let us have that? You know what I mean? Let me take care of that for you. So anyways, we'll be working on that as well. Enough of that. We'll go to the markets here today because that's what you're here to do, is talk about the markets, and I'd like to share some things with you. I got some cool stuff with you. One of the things is the Santa Claus rally. You hear a lot about the Santa Claus rally. I'm going to start going through some of the data with how that works and specifically what to look for. And, I'm really data oriented here, so no personal opinions. We'll give you all that data and a pretty cool little chart to share as long as it's done. Right, Cody? Done? It's done and ready to go. Okay, right down to the last second. Perfect. All right, let's talk about the markets here. A little bit more action throughout the day. We're looking around. We're going to have this action until tomorrow. Through tomorrow. So the Fed meets tomorrow. There's actually like 12 main Federal Reserve Federal Reserves, or their version of it, all around the world that are meeting as well. And so we got a lot of volatility, a little bit of a pullback here today. We better see some kind of tapering from the Fed, or at least maybe talks of earlier rate hikes or something. I don't know what we're waiting for, right? The housing market's doing great. Everybody's kind of moving along, or at least recovering. What do we need? Let's go. Let's stop with this easy money. So I think what would happen is if we hear that, we expect to hear that, that's fine. If we hear anything in addition to that, or changes or comments about changes of earlier rate hikes or faster tapering, that might spook the markets a little bit, but we'll see what happens there. Give you a little bit of data over the last 4 rate hikes. Let's go like this. I want to make sure that didn't just stop on me because my little screen just stopped. Let me just one quick second. Yeah, okay, we're good. We're good. Hey, how's it going there? Bojan. It's Bohan? Damn it, Bohan. Bojan, that's what it was. Yes, I'm sorry. I don't want to get his name wrong. Landon, Kyle, Lisa, how we doing all today? Ashish, hello. Okay, so I was good there. Give you a couple data points there. Over the past 4 rate hike cycles, 93, 95, and so on, the S&P actually gained about 10% leading up to 12 months leading up to the first hike. Check, right? We've done that. So that's our average gain there. Over the next 3 years, the S&P actually has gained 26%. So about average returns there. And the real weakness in the market, if there's going to be any, historically over the last 4 rate hikes, has come at the end of the rate hike cycle, if you can predict that. That's the tricky part there. So if we were to look back, obviously we know when that ended. That's where the market weakness happens. So the first rate hikes, you start saying, oh my God, we're raising rates. There's zero. They're next to nothing. We can afford a half point. We can afford a quarter point, whatever they're going to do. Later in the cycle is where things get a little bit weak as far as the market goes. As far as the markets today, you got the S&P still in second year to date. really stocks that hadn't cracked yet are the ones that cracked today. For example, Microsoft otherwise had been a very strong stock. That was where your weakness was today. Fortinet, otherwise a very strong stock and hanging up there near highs. That one cracked a little bit here today. Intuit, just to point out a few names, you see what we're looking at, right? Stocks that are just doing well. Today they had the rough day. They got the selling today. Keys Technology also not as bad though, about 3% there. And sticking with tech stocks, Zebra also pulling back a little bit. So any real weak stocks that you look at that lost, 2-3%, something like that, that's what they're going to look like. They're going to be stocks that were otherwise up. That's where the mood was today to take profits. Throughout the day, you had almost 40% of the S&P stay green all day. So the markets are down, and 40% of the S&P stayed green throughout the day. 30% of them lost less than 1%. So these are just minor little down days in 40% of the stock of the market which stayed green, and 30% which just lost less than 1%. That's 70% of the market, right? That basically held its own, did nothing throughout the day. 30% of the stocks in the S&P, which were mostly tech, lost 1% or more. The real action, or the best part of the market in the S&P today, were stocks that were under $20 billion in market cap. They had the best performance. And so that's kind of the picture, right? It was a weird day because you had those higher weighted stocks like Microsoft dragging on the overall market there. You also had NVIDIA pull back. It got down to the 50-day moving average. We talked about that one yesterday. I saw the 260 puts went against the grain just a little bit. I'll give you the stats on that here in just a little bit with one of our new tools. If you look over at the NASDAQ, you got a 1% down day back to the 50-day moving average. It is still in first place year to date, so looking good there. If you were to look through, you saw some bottom picking, right? This kind of the theme of the NASDAQ today. DocuSign, best performer of the day. Bottom picking, right? You got Charter, obviously very weak, starting to sell off, get a little more extended. Second best performer of the day, right? Comcast hit new 52-week lows and promptly reversed itself, right? Got all the way back up to positive by 2% for the day. Bottom picking. As you look around, T-Mobile, this is the top. All I'm doing is sorting the NASDAQ 100 by best performers. Bottom picking, right? Moderna, bottom picking. Illumina, bottom picking. Regeneron, not bottom picking. That's where it stops. So a lot of action in the sort of really beaten down stocks today. I don't know that continues, but that's where you have things stand at the moment. You got the Dow pulling back just a little bit on the day. This one was the one that held up the best. It's a price-weighted index, of course, so it's a little bit different. You had some of the higher-priced names like Amgen hold its own, which was otherwise has been a weak stock. Johnson & Johnson 1% on the day and continuing its rally in the consumer staples. Goldman Sachs up 1%. Dow Chemical all the same. You look at some of the drags today, it was only a couple stocks. Salesforce.com down on the day, about 4%. That's a big high-priced stock. And Microsoft, we already pointed that out, so that's kind of what you have going on there. All right, let's take a look at NVIDIA here. Now we'll come back to the Santa Claus rally in a second with you. Here is what we have. So I'm going to use our little tool and research site and show you something real quick, all right? Because we got a new addition to it, and I'm going to show you how we came to this idea. NVIDIA has lost 20% in 22 days. That's how far it's fallen. We'll look back 20 years just to see. And so we get some data here. It'll take a second to load, but NVIDIA, if you don't know, I'll go back over here real quick while that pops itself up. Here's the stock, right? So back since the highs, it's fallen 20%. It's been 22 days, right? So we look at that and we say, okay, if we're interested in a counter trend bounce, do we have anything to worry about? So prior to today, what you would do is you'd look in here and you go, all right, NVIDIA has fallen more than 20% in 22 days, just 32 times over the last 20 years. The average return is 1.5%. Median is about flat. It is positive just over half the time. So you go, okay, cool. It's a 50-50 shot at next to nothing happening. So if you're an option seller, you go, cool, got a little extra volatility here. Maybe I'll sell some premium, see what happens. If you look at some of the worst performers going through it here, you got 12%, 13, 14%. Very rarely does it actually have a really significant drawdown. And this is actually pre-split, so these numbers are a little bit off because in 2002, if you were to look at that on a chart, it would show that it's like 16-cent stock, which is not true. So not accounting for the split there. So if we take that out and we say, okay, now let's go look forward at some data here. I'll go to our new forward-looking tool. We're still working on the design and sort of the way it looks there. I'll get rid of some of these data points, and let's just go up here to the top. We've got all the data that we need, and we're going to say, all right, 1 week later, I wonder what that looks like, right? Because it's a shorter term drop. What happens in the short term? Let's look at, let's do 2 weeks just because I'm here. Let's add another one here. I'm going to go 38 days. That's interesting. Why is he doing that? 6 months for the more midterm type investor that says, I see the discount, I'm happy with 20%, I want to own NVIDIA for the long term, let's see what happens. Using all of that data, we can, what's that, 4? 1, 2, 3. Yeah, that's all I want to use. So using all that data, we now have the ability to see the average, median, biggest loss, biggest gain, and the percent of the time positive. Well, over the next 1 week, the average move is still to the downside, 3.5%. Over the next 2 weeks, 4% to the downside, 38 days, a little bit more to the downside, and over the next 6 months, it would have behooved you to invest in the stock if you were going to buy it anyway. So nice returns going on there. 53% of the time it's positive. And you can look through some of the data as far as the other stuff that you want to see. What I look at is this right here, 38 days, because that's 38 days until a January expiration. So what am I looking at? I'm looking at an average of a small decline, a median of a somewhat small decline, and basically a 50-50 shot maybe right in there. Again, these numbers aren't accurate yet. Don't look at these. We're still toying with the data. And so you got essentially a 43% chance that, let's just say we have the median decline. Let's go back to that for a second. 6%. Well, if you were to look at NVIDIA from where it's at today, go down to the 260 puts there, that's 8%. It's just outside of the sort of median move over the next 38 days. Hence, how I came, or the reason why I came to that decision that, hey, after 22 days of a downturn and being at technical support and all that great stuff that I like to look at anyways, I find that I'm well within the stats to assume that nothing will happen, a slight bounce will happen, or a slight decline will happen. So I'm well within a good reason to make that decision. And so why I mention that is because if I gave you my money, I would want a reason, right? Give me a reason that you made that decision. I don't want to know that you just felt good about it or you bought some NVIDIA stuff. So kind of a cool thing to look at there. That is also coming up to be live as soon as we tweak a few things for our research members and our clients there. So if you're interested in that, there you go. And I'll be tracking that with you. We're going to follow along, see what happens there. Let me actually go here. What's the problem? Where are they going? On YouTube? They kicking you out? I don't know. Nothing I can do there, man. It's still streaming. That's what I'm happy with. A second ago, the screen did go off, and I refreshed it so I could see what was going on. So maybe they did just have a technical issue there, because I had the same here. It didn't kick me out, but same thing. Okay, so moral of the story is, right? Database, right? If you're going to make a decision and you're wrong, you know that statistically you're supposed to be wrong some of the time there. Now you know exactly what it is, and I hope you enjoy that. And I've got my trade here just so we can, don't forget to remind us of what happens or what we do. Okay, Santa Claus rally. Do you know what the Santa Claus rally is? Cody, do you know what the Santa Claus rally is?
I'm aware of Santa Claus
But
rally.
like most people don't know the specific dates, and I think it's a loosely based thing. You know, like versus the sell in May and go away till Labor Day. Those are very defined dates. But the Santa Claus rally is kind of a loose thing. A lot of people look at the last 2 weeks of the year. Some people go from Thanksgiving to the end of the year, and it just depends on what type of, what you're looking for. If you're a longer term investor, sell in May and come back at Labor Day, okay, that's your window. You make your decision what you want to do. From Thanksgiving to the end of the year, maybe you have things going on anyways, and so that's your pocket that you're interested in. Well, historically, the Santa Claus rally actually starts, if you're going to look for the most optimum time, it starts around the 15th day of the end of the year. And since we're almost to the 15th day to the end of the year, I thought we'd take a look. Here you go. So here's the data, Santa Claus rally. So let's slide this over a little bit, get you back on the screen so you look right. What we did is we said, okay, let's look at the performance from the 15th day till the end of the year, all the way to the last day of the year. That's what you're seeing there. So this would be tomorrow, then the day after, and so on and so on. This would be the day before the end of the year. And then we said, well, we want to have multiple data sets. You can't just go back 10 years Otherwise, a really strong market, so maybe that'd be misleading. Let's go back 25 and then let's break it out for 50. What we're looking at here is the performance, the average performance over the last 50 years and the percent of the time that it was positive. So on the 15th day of the 15 days until the end of the year, average 1.25% gain is where you would be at in the market. 70% of the time it is positive. You can see it looks pretty good as you go across the board. In other words, from the 15th day of the end of the year all the way down to about the halfway mark, that's where the action tends to happen. That's where people say, Santa Claus rally. All right, this is exciting. You are most beneficial by starting at as far if you want percent of the time positive, starting at about the 11-day mark. So you're going to start next week. But if the market is going to give us any kind of a Santa Claus rally, it tends to start tomorrow, right? With some degree of certainty, right? 70%, 72% of the time. As you work your way down, notice how all of a sudden it's not so exciting. Things get to be a little weaker, right? And that's largely due to the low volume in the market. So you have a lower probability of the market being positive on any given day, and you have much smaller moves. So everybody gets excited here, they make their adjustments, and then right around that Christmas to New Year's week, which was what you would see right down in here, that's where it gets quiet, and there's not much to say. If you get the rally, you would have gotten the rally by then. So if over the next 7 days or so, starting tomorrow, if we don't see any consistent, significant move there, well then maybe no Santa Claus rally, because you wouldn't expect it right here at the end of the year. Again, 50 years, 25 years, and 10 years. Is that interesting? I think it's pretty cool because you get to see, we basically heat mapped the movement of the market, right? Here's obviously the green excitement, peak of excitement, it fades away, and we all go celebrate the holidays. So that's what you're looking at. You can take a screenshot of it if you'd like, but that is where we stand. New highs, right? 17 new highs on the day, 2 new lows. What do you know? Church and Dwight, new high. Now these aren't like, it's not a big move. It just hit a new high. But this is what we saw before. Yesterday, we saw consumer staple stocks waking up, Church and Dwight. Coca-Cola is another one. Still seeing the action, still seeing people interested in it, even though it's a little extended in here. General Mills would be the same thing. Hit new 52-week highs, a little extended and everything. But other than that, that's where people recognize today that we're late to the party. Oh, there's stuff going on over there. That's what I want to take a look at. All right, I see. Consumer staples, right? I believe there's a Michael Jordan Wheaties box coming out too. Did you see that? I think it's because Wheaties is officially, I think Wheaties is 100. I have a Wheaties box too, by the way, with Michael Jordan on it. I think Wheaties is 100 years old. That sounds hard to say. It doesn't sound like, that doesn't sound right. But I think Wheaties is 100 years old, and Michael Jordan's going to be on that box. So if you're a collector and want to buy one of like 15 million boxes, there you go. So that's General Mills. Center Point. You can't see it. Let's go over here to this screen. Yep, Center Point. There you go. Hit new 52-week highs as well, but not too much going on there. And CNC would be the other one. Recent breakout. Very strong. Centene, obviously, very strong in the short term. And so that one to point out for new highs as well. I think Berkshire Hathaway. Yeah, so Berkshire Hathaway broke out today as well. And that would be new 52-week highs. That one looks like it's getting a little ready to get something started there, right? That's a tough one to track on a day-to-day basis, but I thought I'd point that out. Stocks in the news. Let's see what we got. We got to have something. Yeah, we got something. All right. Oops, wrong one. So here we go. LabCorp. So LabCorp is going to do $1 billion rapid, I don't know what the word they use, a rapid $1 billion share buyback. So here's another one doing their thing. That's about 3.5% to 4% of their total market cap. So not as big as the other ones from the other day, but that's what's going on. Purple, this is the mattress in a box company there. They said, we see our revenues being at the low end of the range. We're not excited about it. Sorry, Wall Street. I hate to tell you that. And by the way, our CEO is going to leave because, well, they're not doing a good job. That was in the news. Pfizer's in the news here today. They said that their new vaccine was 89% effective against the Omicron virus, against hospitalizations and deaths. Not necessarily getting the Omicron variant, but there you go. Tesla in the news because Elon Musk keeps selling more shares. He sold another almost $1 billion worth of shares, so it's a little bit more than the $10 billion he talked about selling, but nonetheless, that's that. And Macy's is coming back, right? They're going to be in the S&P 400. So good for them. Macy's getting the shift back up there, taking the place of Tootsie Roll. So, sorry, Tootsie Roll. We'll see you later. And Macy's is taking your place. Tootsie Roll still does 183 million sales a quarter. Tootsie Roll. You like Tootsie Rolls?
I used to kill Tootsie
Really?
Rolls. I eat too many of them. Even the thought of them makes me sick.
Oh, well, I guess because they had the flavored ones. All right, so I've had those. I like those. The regular old traditional Tootsie Roll, I can't tell you. That was like in the Halloween bag that you'd have at the end of the night. That was the last one I'd go for.
I love those.
Yeah.
Used to.
There you go. All right, didn't know that. All right, let's see. I'll let the stream catch up and see if you have any questions there. Happy to help, and we'll do our thing here. What else? For tomorrow, we have only earnings from Lennar. So if you're looking for home builders, some action tomorrow, you got Lennar coming at you. Yep. We'll see how tomorrow's hopefully going to be pretty exciting. Right? The Fed announces at 2, and then they'll have their press conference afterwards, I believe. So, yep, that'll be tomorrow, of course. Wheaties is 97? No, come on. Give me 100. Yeah. I have a family that's married into the purple family, so not cool to hear. Uh-oh. Oh, boy. Yeah, hopefully they do. There's a lot of competition there. That's the trouble, you know what I mean? There's a lot of competition out there for that mattress in a box kind of thing, or that memory foam type mattress. They came along. Yeah. Wheaties, there you go. Created in 1921, so 100 years. We'll take Matthew's word for it there. Oh, yeah. Still feeling good about Fang? Yeah, well, I mean, the year's almost over there. So that could be where Fang just wraps it up, right? Calls it a year, back and forth. Oil's not doing... Huh? You got nothing over there? You good? Did I hear a peep? You got nothing going on there. Oil's basically settling down here into the end of the year. Any holiday pricing may have been probably factored in by now. Yeah. And Paul, yeah, I didn't forget you, man. I was spending the day working on this forward tool there. So we'll do that. That's a good one. We'll do that tomorrow. I said that yesterday. I wanted to show the NVIDIA thing. S&P performance after 20% year. We'll look forward and we'll do, like 6 months, a year, because I played with it last night and there's some interesting data there. So we'll go a little bit further. I gotcha. Don't miss an all-new episode tomorrow. Closing beat. Yep. Oh, boy. Yeah, no real move there. It's kind of a quiet day on a lot of stocks out there. So Southwest, you can go through the middle bulk of the S&P and just find 0.5% gain or loss. Sort of uneventful there. Yeah. Time to buy Square. What you doing with Square, man? You like that extended move? So I know a lot of people are looking at this, getting extended in here. Obviously a very sharp sell-off and waterfall looking. I definitely think you could be looking for your catch a falling knife trade if that's the kind of thing you're into. Yeah, wouldn't bother me. You got Evergreen, good support. You like that? I'm guessing some kind of longer term hold there. So the support he's talking about is right in here. So you got all these previous lows. Got a little room if it wants to poke under 130, but other than that, you're right. Evercore, I said Evergreen. You said Evergreen. You made me say Evergreen. Yeah, either way, you got your support right in there. Not bad. I like it. Well, I appreciate you guys hanging out with us here today. Hope you have a good rest of your day and enjoyed the different types of data that we shared today. And let's go Santa Claus rally, right? Tomorrow's the day. Got to get that thing started. We'll see what happens. Enjoy the rest of your day. Thanks for coming by. Thanks for hitting the subscribe button and all that stuff too. I see you there. I'm not going to ask today because I see you guys doing it for us. I appreciate that. Enjoy.